breakdown of different types of banks in the Philippines. Number one, commercial banks are all-purpose financial institutions that provide a broad range of financial services to people, companies, and other organizations. Deposits, loans, trade finance, treasury operations, and investment banking are among the services they offer. Number two, banks that specialize in collecting deposits from individuals and offering mortgage, loans, and other consumer lending services are referred to as thrift banks, also known as savings and mortgage banks. In addition, they might provide other banking services like time deposits, savings accounts, and remittances. Lastly, the banking requirements of rural and agricultural communities are met by rural banks. They serves cover basic banking for farmers, small businesses, and rural residents, including savings account, loans, and remittances. They have significant impact on rural development and financial inclusions.
Functions and roles of commercial, thrift, and rural banks. The backbone of the financial system is comprised of commercial banks, which offer a vast array of financial services to individuals, businesses, and governmental bodies. By enabling credit, facilitating payments and transactions, facilitating savings, and providing financial advising services, they promote economic activity. Thrift banks are expert at locating personal savings and allocating them toward consumer and mortgage loans. They are essential in encouraging consumer, finance, and home ownership, especially for lower and middle class households. Rural banks concentrate on meeting the financial needs of people living in remote areas, small businesses, and farmers and rural communities. They offer crucial banking services to assist with agricultural operations and rural development projects, including savings accounts, loans, and remittances.
In order to maintain the safety, soundness, and compliance of Philippine banks with banking laws and regulations, the Bangko Sentral ng Pilipinas is in charge of regulating and overseeing them. Aspects of banking operations covered by the BSP's regulatory framework include capital adequacy, asset quality, management soundness, liquidity, and risk management. The BSP regularly inspects, examines, and evaluates banks in order to determine risk, evaluate their financial stability, and ensure that legal requirements are being followed. Additionally, it publishes rules, guidelines, and directives to support the integrity, efficiency, and stability of banking industry.
Importance of a well-regulated banking sector. Regulation helps protect depositors' interests by guaranteeing the security and safety of their money. Sustaining financial stability. The banking system and the overall economy are both vulnerable to risks that can be identified and reduced with assistance of effective regulation and supervision. A strong system of anti-money laundering and counter-terrorism financing is established by regulation by aids in the prevention of financial crimes such as money laundering and funding of terrorism. Encouraging market integrity. Regulation fosters reasonable and open banking procedures, protects consumers, and builds the financial system credibility. Encouraging sustainable growth. Financial intermediation, capital formation, and resource allocation that is efficient are key components of sustainable economic growth and development, and they are made possible by a well-regulated banking sector.